Welcome back to episode 23 of the $10,000 SOXL challenge. Today was a very special trading day because we had absolutely no trades. You might find that strange. No trades, so what's there to see? On the contrary, today perfectly showcased our trading system's most underrated and most powerful core advantage: discipline and patience. In a market full of temptations and noise, we chose to stay on the sidelines. And as it turned out, that was the smartest decision we could have made. Now, let's recap this complex and gridlocked market day. Market scan. A global wait-and-see signal. On July 31st, it was as if the global markets hit the pause button, collectively entering a phase of digestion and waiting. On the macro level, the Fed's decision to hold interest rates steady cast a shadow of uncertainty over the market. U.S. market performance. The major indices closed mixed, with a notable drop in the Dow, clearly exposing the market's hesitation. Asian markets. The A-shares and Hong Kong stocks both pulled back, with the Shanghai Composite dipping during the session and the Hang Seng Index losing a key level. Overall, after the barrage of earnings reports from tech giants, the market's energy seemed depleted. Bulls and bears were locked in a stalemate, lacking any clear direction. Caution became the consensus among all investors. SOXL debrief. How we turned down a profitable trade. As the core of our challenge, SOXL's price action today fully reflected the market's indecision. A full day of high-level consolidation and repeated fluctuations. And this is where it gets interesting. According to our backtesting data, if we had turned off our Bollinger Band filter, the system would have triggered 2 trades today. 1 winner, 1 loser, resulting in a slight net profit. However, our system, our disciplined gatekeeper, intercepted both of these trades. This might seem like a missed profit, but it perfectly validates our system's core philosophy. When the market direction is unclear, the primary mission is to preserve capital, not to chase every minor ripple. While this discipline means we might forego some small gains, it helps us avoid much larger potential losses and keeps our ammunition ready for opportunities with real certainty. QQQ observation. Tech stocks take a halftime break. QQQ, which represents the Nasdaq 100 index, also entered a halftime break after the earnings season. The market is struggling to digest a massive amount of information, causing QQQ to trade in a narrow range all day, devoid of any clear unilateral trend. In this kind of market, neither momentum strategies that follow the trend nor mean reversion strategies that play the reversals could find a high probability entry point. Our system acutely picked up on the market's silent signal and correctly chose to watch from the sidelines. Conclusion and takeaway. Today's core lesson: paying an insurance premium for certainty. Today, our portfolio of strategies chose to remain inactive, and this perfectly embodies the beauty of systematic trading, removing emotion and embracing rationality. So, how should we think about that small, profitable trade we intentionally filtered out? You can see it as an insurance premium, willingly paid to ensure long-term stability. By missing out on one insignificant gain, we saved on transaction costs, conserved our energy, and can now calmly await the next clear signal. Remember, trading is a marathon, not a sprint. It's a contest of endurance and strategy, not speed. New account balance: $10,230.29. As always, all P&L calculations exclude commissions for pure strategy tracking. If you want to learn more about how our multi-strategy portfolio works together to stay rational in complex markets, don't forget to subscribe and turn on notifications. See you in the next episode.